Hi all, this is a review of a Euro Pound sell trade I tried today on the 15 minutes. The setup I saw was first of all all of these trades that I took today and that I probably will take for this week. Most of them will be based on my higher time frame picture, and for this my higher time frame picture is that on the weekly I see that price is reacting from an excellent monthly area of resistance, and I am anticipating a monthly sell down or a weekly sell down down to this bottom of the range over here, which would be a lot of move with it should be a lot of profit potential, especially if I manage to catch it and ride it on a lower time frame. So the setup for this particular one, I was looking at catching it on the 15 minutes, and I saw very good sellers coming down over here, and the buyers are coming up in a more choppy way. And after this sell down, making this low, I was trying to get it on this pullback. Now last week my timing was my timing for the middle of the week, especially in last week, was quite good, I think, or I had the impression at least that my timing was quite good last week, and so that affected how I played my trades today, this trade and the next one, and I just had very small stop losses, but more importantly, I was trailing my stop losses much sooner based on the lower time frames, because I had this impression that my timing is quite good, and so after I get the trade in, it should run, which was just an illusion. It was a false sense of competency, because these trades that I looked and took, I did not really wait too long for these setups. It was more like jumping into a setup which was looking good. So the chances of a trade being a big runner at the exact time I go onto the computer and find a trade is probably not so high. So there was a bit of deceiving myself, or just fooling myself there. And that's the core mistake I would take from today. Anyway, back to the trade. So the setup I was looking to play was the pullback over here, and I saw that in this consolidation the sellers were a bit stronger, so I wanted to catch a sell down at least to this low over here, and possibly even lower. So as can be seen, I caught the trade based on the 3 minute and 1 minute. So I caught the trade right here. Oops. I caught the trade right here when I saw move up, and I was looking at basically in this whole section, I was looking at this resistance area over here. It was continued to be holding. So my setup here was move up, strong move down, move up, and then a bit of a consolidation and move down. So therefore I wanted to get in on this sort of pullback of this consolidation, and I actually got my entry down on the 1 minute time frame. Now my entry was a little bit well, I think it's okay given the stop losses, but if I want to be really precise in the entries, I have this idea that I need to get the entries at the congestion zones. I cannot really get the entries after big strong sell candles like this that fail to achieve anything. So this strong sell candle, it reacted from this area, sure, but it failed to achieve anything. So I think this is an okay entry for the stop loss size, but if I really want to catch big runners, one idea I've just had after this trade and the next trade was I need to catch it at the actual congestion zones, and only when a move follows after an actual congestion does that move have higher chance of sustaining itself. Otherwise, if a move comes in and makes lower lows, but without strong congestion happening at that area, it's more likely to actually have sharp reactions back in order to fill in more liquidity. Because of lack of congestion, less orders would have been accumulated. So that's some of my theory crafting over there. Now in this one, of course, the sell trade was took after this strong sell down, a little bit of a pullback. My stop losses were relatively safe. It was a bit above all of this, and that was logical, I felt, because it's the thesis was that it should not break these highs. So after this, I was glad to see this happening, reacting at this resistance zone and still keeping below these sellers. If this happened near this area, that would have still been a good sign, because it was congestion happening near a strong resistance. But it's the fact that it was higher, it would have made me feel a bit more uncomfortable. But this was fine, and I was very glad to see this very strong move down. I did allow for this pullback, and at this point I had my stop loss somewhere around here, and I'm aware that this could be a downward channel or a lower high sequence forming. Now after this strong move down, this was probably my clue that this move did not happen after some sort of congestion. Therefore, because this low was made, this new low was made without a real congestion driven breakout, a sharp reaction is more likely. So that's my theory crafting right here. So I did not realize this at the time, and therefore did not take out profits over here. In fact, I had my stop loss down to about break even, and even when I saw these candles come back up, I just did not exit, even though I sort of realized, hey, this is probably going to go back up, because I realized this congestion driven move versus non-congestion driven move and the reactions that follow from such moves. I did realize that, but I didn't get out. I just let my stop loss get hit, and I got out at pretty much break even, a little bit better than break even. So that's the trade. Main mistakes was, of course, I think moving my stop loss in this example. I don't think it was too much of a big mistake. The read was completely fine and everything. I think the bigger mistake was this. Was missing this key idea of congestion-driven breakouts are less likely to have sharp reactions up. Non-congestion driven breakouts are more likely to have sharp reactions up. That's the thinking I have right now. So that's my bit of theory crafting here. So I'm just going to spend the next few minutes going over this same chart and looking for more evidence of this sort of theory, and the logic for this being, for a congestion driven breakout, a lot of time has passed for orders to accumulate and drive the breakout. Whereas for non-congestion driven breakout, not many orders have failed to drive the breakout, and therefore when price does come back up, if there's an obstacle and price returns, if there's an obstacle, price may return more sharply to get more sell liquidity from that initial breakout origin. And this is indeed what happened over here for the next big breakout. And this was a congestion driven breakout, but this was a congestion accumulation period, and that gave this breakout. And of course we had a bit of congestion driven down there, very sharp reaction up because this was not an extended congestion, and so on and so forth, I think. So I think spending the last few seconds here, we see non-congestion driven breakout, but it does not have a very sharp reaction. Why? Because this is reacting already from a very logical area over here. So this, if the breakout comes after a bit of fake out move to grab liquidity at the logical area, then this breakout does not really count as a non-congestion driven breakout, because this is actually reacting from a previous level, and it was more like a fake out move. So unlike this one, this is not really like a fake out move. This actually was a proper pullback move all the way up and then down, whereas this was not a proper pullback move. This was just a fake out down and up. So looking for more examples of this, let me see. I have congestion, a bit of congestion over here and a breakout, and we have a sharp reaction, and this may be because the congestion was not happening in a very sideways distribution or accumulation sort of format. It was more rapid, so that may be a reason. So again here, congestion driven breakout and not as much of a sharp reaction. Congestion driven breakout, not as much of a really sharp reaction, whereas here the reaction was indeed quite sharp. So looking for more examples, let's look on the 15 minutes. Let's see if this was this. I can say this was had a little bit of a congestion. Yes, this definitely had some congestion as orders were being built, were being formed in this range, and this breakout is more likely to hold and not really have a really sharp reaction, which is kind of what we're seeing here, which is good. This one again, very orders were being accumulated throughout all this section, and huge breakout, no real sharp reaction. Let's see in this one. In this one, this will be very interesting. So then of course this may have been driven by news events, but we see that there was congestion over here. There was definitely congestion over here, and then the breakout up happened after some more congestion. I don't think this really applies. This was not an immediate reaction. This was the reaction. So due to this congestion, this strong move down, and it was not a sharp move back up. That sharp move actually took some more congestion. So that makes sense to me. Let's see this one. Alright, so we have here move down, move up, congestion, no congestion, move down, and we have some sharp reactions back up. So that makes a bit of sense. Let's see, congestion all the way here, so move down. Now this has some sharp reactions up, and but this was not a really sharp reaction, although it was more to just grab liquidity, and that I think kind of would make sense. But because this whole key seller orders building up zone over here did sustain. So I'm gonna keep in mind this idea about congestion driven breakouts and non-congestion driven breakouts. It was actually inspired by a discussion I had with a friend of mine. So hope to apply this sort of knowledge, or at least test this sort of knowledge in future trades. Thanks, and hope this new approach of trade discussion plus also just a bit of theory crafting and finding examples was okay. Thanks, and comments and questions are very much welcome.